Hello, good afternoon. It's perfectly 12 o'clock, and welcome to our Making Tax MTD client webinar. We'll be going through some of the changes that are coming up for the self-employed and for landlords in the next couple of years, and showcasing how you can make this easier, what changes are actually happening, and how you can get prepared for MTD. And joining us on this webinar is myself. I'm Arjun, one of the founders at Taxed, and really have a passion for making tax easy using technology. And I think now is such an important time with more tax changes coming up with the autumn budget. Super important to review your tax exposure, maximize your tax efficiency, and get ready for upcoming tax changes. I'll pass over to Eamon to introduce himself too.
Thanks, Arj, and welcome everyone to the webinar. I'm sure I've spoken to a fair few of you over the years supporting with the taxes. Right now, I'm mainly focused on kind of limited companies and businesses, so not quite linked to the personal tax and MTD, but we may see later on in the webinar where that connection is. That's myself, and I used to work with Arj and Joe. We're all ex-PwC. We were all in the team together, and now it's a coincidence that we're all back together giving this webinar now. But I'll hand over to you, Joe, to intro yourself as well.
Thanks, guys. Yeah. So hi everyone. As Eamon said, I've probably spoken to a lot of you guys that have joined the webinar as well. So I'm the tax lead, really focusing on the kind of the personal tax side of things. So yeah, kind of joined the team about a year ago now. So supporting Arjun and Eamon in kind of developing the software, really trying to kind of make, as Arj says, make the tax filing process as simple as possible for you guys. So yeah, looking forward to getting into this one with making tax digital. As Arj said, lots of changes coming up in this regard. So yeah, looking forward to it.
Awesome. Thanks, Joe. And before we kick off, just to provide a bit of a frame for this webinar, this will be interactive. So we want to hear your questions. We want to understand how we can support as well. So keep questions coming on the chat. We'll try to answer it as we go through the webinar and as we showcase how we can support with MTD coming up. And then we'll also have some time at the end for questions. So we've held some time for a formal Q&A. But to kick things off, if you've ever been to one of our webinars or in-person seminars, you'll know that we love a quiz. So if you have a smartphone nearby, please grab the smartphone. It's the only time that I'll ask you to use your smartphone whilst on the webinar. Scan the QR code using your camera, or you can just go to slido.com and then use the hashtag TAXD to join the quiz. We'll be kind of going through a few different aspects of MTD. Think of Who Wants to Be a Millionaire, but the MTD edition. And we normally have prizes in person, but for this, we may need to skip that. But have a go, scan the QR code on screen, and you'll be joining the quiz. You'll start to see a question on screen when you scan that QR code, and you should be able to join the quiz at the same time. And this question is just to warm up, make sure that we can all enter the quiz before we start the actual questions. So we'll give everyone just a couple minutes or so to jump in. We'll see we've got some superpowers on screen, being able to fly. I like that one. I think certainly if I had a superpower, being able to fly or teleport, I can fly to Spain and visit Eamon.
Usually there's one, pay no tax. That's always a good.
Pay no tax, move to Dubai, move your tax residency. Perfect. Can't get on the quiz, you're joining this on your phone. No worries, if you can't join it, that's absolutely fine. And also if you're watching this as a recording, absolutely fine as well. This will just provide you with a bit of insight anyway, whether you're involved in the quiz or not. Hopefully it'll provide a little bit of insight into the MTD updates. So now let's hop into the quiz itself. You'll be asked to enter your name to be able to join the quiz, and then we can look at how this works. So you can enter your name and then you'll be able to jump into it. And starting off with our first question, what is MTD? I may have kind of given it away at the start, but is it A, making tax difficult? And I think that's certainly something that we've heard from clients, is HMRC actually just trying to make things more difficult at the moment. Is this going to create more time consuming processes? And is it going to be a pain? And it seems like there is some issues with logging into the quiz on iPads and phones, but no worries if you can't join. It's all good. Perfect. Looks like everyone's got this one right in terms of what MTD actually stands for. And who does it impact? Is it landlords? Is it sole traders, employees, or limited companies? It's a common question that we get asked. I have a limited company, so I'm self-employed. Do I need to file quarterly updates with HMRC? Awesome. We'll give everyone just a couple more seconds. Perfect. Now, we can see the answer here is landlords and sole traders. So we're looking at your rental income if you have a property, or your income from your sole trader business. Now, there's a couple key things when it comes to MTD that HMRC are looking for. Is it A, keeping your records online, keeping a digital record, B, submitting quarterly updates to HMRC, or C, filing an end of year submission, or D, sorry, paying HMRC during the tax year 2. Now, this is a multiple choice question as well, so you can choose more than one. And it's a common question that we get from clients. What do I actually need to do? And these are some of the key elements here. And we'll jump into the answers in just a second, and we'll go into it in a lot more detail throughout the webinar. But it's good to see some of these answers. So actually, the key things is keeping your records online, submitting your quarterly updates, and the end of year submission. You don't actually need to pay HMRC during the tax year. So your quarterly updates, it doesn't mean you're paying HMRC from those quarterly updates. You'll pay in a normal way by 31st of January, which is a common misconception with the MTD changes. And just at a high level, are there any penalties associated with not filing your MTD updates? Is it A, yes, you receive a fixed cash penalty? Is it B, you will receive a penalty point, which will lead to cash penalties similar to a speeding ticket? Or is it C, no, there's no penalties for any quarterly updates? We've just got a question in terms of, will the recording be available? Yes, it will be available if you signed up for the StreamYard link, and that will be sent automatically to your email address afterwards too. And let's jump into the answers here. We can see there's a bit of a mix, but it seems like most of us have got that one spot on. You will receive some penalty points, which can lead to cash penalties, and Joe will go over this in a bit more detail in the presentation too. Now, a super common question that I get all the time is, can I still use my spreadsheet? Everyone, I say, me personally, I love using a spreadsheet. I use it to track a lot of different things. It's great, I think, from an accountant perspective, being able to type in your formulas, create and customize how you want your spreadsheet to be. But can you use it for MTD? Awesome. We've got most answers showcasing yes. And the answer is yes, you can still use your spreadsheet. And we'll go into a little bit on how that will work. There's 2 different options when it comes to MTD: utilizing a spreadsheet and then software to connect with HMRC, or using tracking software. And we'll show you how we can help too. Final question is around updating and amending your quarterly updates. Can you edit your quarterly updates throughout the year? No, once you file it, that's it. Or your quarterly update is cumulative, so you can make adjustments as the year goes on. So when you're filing Q2, you'd be filing for Q1 and Q2. or you can always update a previous quarter by filing amendments, kind of similar to the current self-assessment or company tax regime where you can file an amended return. We'll just give everyone a few seconds to answer this final question around quarterly updates and amendments. Perfect. So, we've got a bit of a mix here. So the answer is actually quarterly updates are cumulative. So it's slightly different to the VAT regime where you're filing for each quarter. This, we're looking at cumulative updates. So when you're filing your Q2 update, you also include your details from Q1. Now that makes it a little bit easier because if there is anything that's changed, you don't need to worry about changing it from a previous quarter. Just go ahead and make the update when you make your next submission to HMRC. Perfect. So that is the updates, and we've got a winner here. Amazing. Well done, Joshna. Great work. I have to send a prize over. But anyway, let's jump into some of the key components of MTD, and I'll pass over to Joe to take us through.
Good stuff. Thanks, Arj. So yeah, got to kind of start with some of the real basics really around MTD and who is caught by MTD or who's impacted by this and how you might be impacted. Just to set the scene a little bit in terms of like why is this happening? Why HMRC kind of introducing this and asking people to make quarterly updates? The idea behind making tax digital, I think, has been being floated by HMRC, for years, right? Arj, probably, when we started our careers at PwC, HMRC were talking about this, and now they're finally bringing it in. And just in case anyone's wondering, I think, like, from our perspective, the reason that HMRC are doing this is probably twofold, and it's for HMRC's part, it's visibility of individuals' income that typically doesn't normally get reported until year end. So we're going to obviously talk about rental income, self-employment income. As things currently stand, people report their numbers at the end of the year, and HMRC have no sight of that and until your self-assessment tax return is done. Whereas what HMRC are trying to do really is create a bit more of a level playing field for people that are self-employed versus employed people who are, on payroll, and HMRC get a monthly update from your employer. So whilst at this point no tax is going to be due, as we've touched upon, the idea is that HMRC have a bit more visibility, but also on the flip side for the taxpayer and the individual, it's actually, I think, although it's a bit kind of scary for a lot of people and maybe a bit confusing, it's designed actually to help and make sure people are kind of tracking their income and are sort of on top of their financial affairs, really. So I think once it's kind of up and running, there are benefits to this, and there are valid reasons as to why it's been introduced. Anyway, just in terms of who is going to be caught by this, or what are the trigger points, really. So as you can see on the screen, right, and you've probably read up on this, but HMRC are implementing a phased approach to whether or not kind of people are going to come under making tax digital. And it starts from next year, as I think we're all aware. So as of April 2026, the threshold for qualifying income, which is kind of the trigger point, whether or not you're above that, is going to be £50,000, right? So if you are above £50,000 from April 2026, and I'll talk about how that's measured in a moment, but it's £50,000 for year one. And when we talk about qualifying income, we're talking about gross income. So it's not income less expenses. It's not your net profit. It's going to be your gross income that you receive from self-employment and or rental income. And it's a combination of both self-employment and rental income to determine whether or not you arrive at that £50,000. So if you're someone who is self-employed but also has rental properties, you need to consider both. If you are self-employed and employed, you do not consider the PAYE income, and then there's a couple of other that kind of income that you wouldn't consider. Mainly, pretty much all other incomes are not really considered. It's just the rental. and the self-employment. So what you don't need to do is add the incomes together, employment and self-employment, that is, but you would have to have a rental and self-employment. Pension income, Arj, we spoke about this earlier, remind me, is pension income is not included in this calculation, right?
Not included. So we're only looking at self-employment and your gross rental income. So any kind of pension income, any partnership income, or any income from trading shares will not be included in your qualifying income calculation. If you are filing a self-assessment with us, we'll notify you if you are in the April 26, 27, or 28 threshold. And each year that you file with us, we'll tell you what your qualifying income is. And that also includes savings income too, Paul. So don't need to worry about that. The key thing is, and I don't want to use technical terminology, but we're looking at the gross income on your SA 103 page and your gross income on the SA 105. So that is your rental page or your self-employment page.
I think it really is at this point as simple as self-employment income or rental income, and you can pretty much disregard everything else. So yeah, kind of got this phased approach. Year 2 from April 2027, I think, is the year that we and HMRC are expecting to catch the most amount of people. And then from April 2028, that threshold drops from £30,000 per year to £20,000 per year. So they're the thresholds, and how do you measure that? Well, it's going to be based off of your last self-assessment tax return. So when you file your 24-25 tax returns, and some of you may have already done it, then that's going to be the measure for April 2026 onwards as to whether or not your qualifying income is above £50,000. And this will apply at any point that you become kind of within the scope of MTD. It's going to be based on your last tax return. So for 2027, you'd be looking at your 25-26 return to understand whether from that point your qualifying income is £30,000 or not. Couple of other things to mention, I guess, just in terms of maybe some overseas aspects. So at this point, non-residents, it's just popped up there from Patrick, that question, as I was about to mention it. Non-resident landlords for year 1 are not within the scope of MTD, regardless of income, because on HMRC's kind of MTD pages that they've released, there is kind of no SA 109 equivalent. So for people that are non-residents and file self-assessments, you have to kind of complete, and we would do it for you, is the SA 109 pages, which lets HMRC know that you're non-resident. From April 2026, they're not quite ready to kind of offer those, so you wouldn't be under MTD. But I think we're expecting it from April 2027. Non-resident landlords with UK property income, if your kind of income is above that £30,000 mark, then yes, from that point you would be included, but not for year 1. And the other kind of thing on the flip side is UK residents with overseas property. The overseas property income, as you're a UK resident, taxable on most of the time on worldwide income, that brings you within the scope of MTD if your qualifying income is above the threshold. So UK residents, overseas income, overseas property, you'd have to consider that. Non-residents, year 1, you would still be filing a normal tax return at the end of the year without MTD. Just looking at a couple of questions there. I think we can probably go to the next slide, Arjun, whilst I'm just checking these questions.
Sure. Just to address this question around the thresholds, these are fixed at the moment, and it's a common issue that we are trying to bring up with HMRC and the media, etc. Is it really should be linked to an index. Otherwise, actually, there would be more people that are brought under thresholds as inflation increases, etc. And we were talking about this with the LBC this morning, and it's a common issue that is brought up. But at the moment, these are fixed.
Question from Rob there around if your income's going to be above the 50k next year. I think this kind of just links back to the point around the trigger point is going to be the tax return that you file that shows that your income is above the threshold. So I guess, right, it's based on your 24-25 tax return, Rob. So if your 24-25 tax return is below 50K, you're not going to be in the scope of MTD for April 2026. But then if you file in the next year and your income for 25-26 is 30K, then you would be in MTD from April 2027. I think that's a bit of a fiddly point, but the key to remember is it's always going to be based on your most recent tax return. And you don't need to preempt this. You don't need to think to yourself, "Oh, I'm gonna hit the threshold, so I need to do MTD." It is going to be based off of that tax return, the most recent one. So yeah, maybe we'll try and tackle some of the other questions as we go. If we dive into the next slide. So what do we need to do? Kind of obvious, right? I guess in some respects is going to be submitting these quarterly updates. And as we mentioned within the questions at the start, the quarterly updates is going to be kind of just based off of the income and the expenses that you receive. But those quarterly updates, as we've mentioned, are not going to require you to pay tax. But you will need to submit 4 quarterly updates. Now, you have to use a third-party software, and that's where like we will come in. You wouldn't be able to go on HMRC's website and do this. You would need to use third-party software or an accountant. And as I just mentioned, you can kind of make the updates in the next quarter if you need to. We are probably going to suggest that you want this to be as accurate as possible, but there is kind of a little bit of scope to maybe make an update in a future quarter, and you'll also have to do kind of a year-end submission, which is effectively going to be a tax return, right? So you do your 4 quarterly updates and then your year-end submission. And I think for us and the industry and for you guys, hopefully, the beauty of doing these quarterly updates is that when you come to do your kind of year-end tax return, we'll have all of the data. The data can just be kind of pulled, and we can sort of pre-populate a tax return for you, and it's basically done and dusted to some regard. You would have to kind of put in other income sources and information in there so that you capture everything in the year-end tax return. But as far as your qualifying income goes, that's kind of going to be, you're going to be doing it quarterly. That's sort of the whole idea of it. HMRC are asking individuals to kind of keep digital records, and I think Arjun will probably talk about that a little bit more in terms of how that links into using software and stuff like that, and what does actually keeping digital records mean, because it kind of sounds obvious, but probably a few things to just touch on in terms of what that actually means. And then just checking to see if there's anything else that we sort of need to mention. Have mentioned the trigger point being the tax returns. The only other thing I'd probably mention in terms of not so much what you need to do, but what you need to probably avoid is like your late submissions and stuff like that, and not registering, because there is going to be a penalty regime. We don't know how lenient HMRC will be at this stage. We'll assume that they will charge penalties for late submissions. It came up in one of the questions, right? So it's going to be points based, a little bit like we were having a joke earlier. It's a little bit like speeding tickets. Probably you don't get fined, or you might not lose your license for your first offence, but it's going to build up, right? So I think HMRC are allowing. I wouldn't say allowing, but the points system is based on 1 penalty point for each missed deadline. So if you miss a quarterly update, you will get 1 point, 1 penalty point. And then after you've kind of reached 4 points, which is basically 4 late submissions, the fine is going to be £200. So this is quite different to the self-assessment penalty system. The self-assessment tax return is just, well, there is more of a regime, but if you're late after 31st of January, it's £100. This is a little bit more based on penalties, and this is just for late submission. There's a regime in place for late payment and stuff. It's going to be based on a percentage of the outstanding tax and stuff, but where the tax is not being paid up front, that's not really going to come into play until after the deadline for submitting the year-end tax return. Just in terms of the dates, right, for submitting the quarterly update. So MTD kicks off from April 2026. the first quarter ends on the 5th of July. So April the 5th to the 5th of July is Q1. And you will have until, I believe it's the 7th of August. But it's going to be basically a month and a couple of days after the end of that first quarter is the window that you will have for filing. So I guess the key point there is that MTD starts from April 2026. We don't actively need to make any submissions until after July 2026. So the first quarterly update will be from July 2026. So hopefully that's kind of clear in like what you need to do. And we'll, as I say, we'll talk a little bit more about specifically how is this going to work with Taxed and the software and stuff like that. But in terms of what HMRC want to see, it's going to be these quarterly updates and a year-end submission, basically, all to be finalised by 31st of January, following the end of the tax year. Anything you want to add to that, Arj?
Sure. I think just before I jump into how we'll support showcasing some of the software, just to answer a couple questions here. You must use third-party software, but you're already using third-party software like Taxed. So we are an MTD-approved software provider, as well as for self-assessment and company accounts and corporate tax. We will be able to submit the quarterly updates and submit the end-of-year submission. Now, I'll showcase it in a couple minutes exactly what that will look like, but as you're already using Taxed, what we'd really like you to get out of this webinar is know that we've got you covered. We'll be able to support you, and whether you want to use a spreadsheet or use our tracking software, it's all good. And in terms of the filing of the full updates, this is a common question that we get is, can I just input minimum data in the quarterlies on the basis that you would do a proper submission in the end of year and the tax is actually calculated? Now, although technically you could do that, what HMRC are looking for is that you're keeping your records throughout the year. So if you're able to showcase that you are keeping your records as much as possible, and then cumulatively amending that, that's probably fine. But what they might see in a situation like this, if you're just submitting a 0 quarterly update and then adding everything at the end, is they may say, well, actually, you're not keeping your records online. You are amending it just at the end of the year. So it's important to showcase that there is that record keeping throughout the year and it's as accurate as possible. It doesn't need to be 100%, but certainly they're looking for that, the audit trail. And we'll showcase what that looks like in a second. And how will these changes affect our charges? We'll jump into this when we talk about how we can support in our pricing. And also, just to be clear, if your income is less than 50K, your qualifying income is less than 50K, you do not need to use MTD for the next tax year, so 2026, April 26 start. Perfect. So, common question as well that we get is, can you still use a spreadsheet? And the answer, as we mentioned in the quiz, is yes, you can. The super important thing is that there is a link between your spreadsheet, the software that you're using like Taxed, and HMRC. So you wouldn't just be able to key in your updates unless you're just reporting 000. You would need to showcase that you have your records within a spreadsheet or your records in the software. You would connect that up with Taxed, and then you can submit to HMRC. How that connection works, it could be that you're using a template that we have to track your income and expenses, or if you have your own spreadsheet, that's absolutely fine. We will have a template that you can copy into your spreadsheet where you're just reporting the high level figures. So your total income, your total expenses, and your net profit. That's what HMRC want to see, unless you're earning over 90K, and then they want a full itemized kind of breakdown of your expenses. And that's where we may ask you for your total amount spent on accountancy fees, your total amount spent on repairs, maintenance, your total amount spent on assets, etc. But for most cases, we're just looking at total income, total expenses, and net profit. And we can connect up with your spreadsheet, and then we can submit that to HMRC. And if you don't like using spreadsheets, tracking software at the top right will help. And we are shortly about to release a bookkeeping tool, which will enable you to connect up with your bank account or upload your bank statement, and we'll do some of the heavy lifting for you. We'll be able to review your transactions, automatically categorize it for MTD, and prepare your quarterly update with you only having to review and hit the submit button, making it super easy as you move towards MTD in the future. But just to show you what this looks like as well from a spreadsheet perspective and submitting, you will all have access to this via your taxed account. There should be a left-hand side, you'll see MTD Making Tax Digital, and you'll be able to see what this looks like through a demo submission mode. So let's say that I want to submit for my taxed freelance. I can click view and submit, and I can choose whether I use a spreadsheet, software, connect with a bank account, etc. But for this example, let's just hit spreadsheet. I can upload my spreadsheet into the software, and then you'll see what the output looks like. We see a breakdown of income and expenses. In this case, they are itemized, and then we can hit submit. And that is the process. It's super simple when it comes to submitting that MTD quarterly update if you've got your records online via a spreadsheet, or if you're going to use our tracking software, which will show you separately, you'll be able to connect your bank account, and this MTD submission will be automatically populated for you every quarter. Perfect. And just in terms of the charges, we're looking to charge a very similar price to what we do for a self-assessment. So if you're already filing with us, your self-assessment, £99 would be our annual fee. Alternatively, if you prefer to pay on a monthly basis, we're looking at around a £10 to £12 monthly fee, depending on the level of support that you'd need. And yeah, so we're trying to really align it with our current system. So it's not an extra cost to you. It's just ensuring that these quarterly updates are submitted. Question here around spreadsheets that you can use. Yes, so within your taxed account, you will be able to look at a template. If you select under obligations that you do not track your transactions, we have a sample template that you can download here, and that showcases what one of these spreadsheets could look like. We're also creating more templates, ones that you can copy into a current spreadsheet that you're already using, and also our software for the bookkeeping will be released shortly. We'll send you a few snippets of what that looks like too. Perfect. So that is a bit around our software. Just a couple other questions whilst we're discussing software, is can you save and keep all of our expenses within tax? You will be able to. That will be as part of our tracking and the bookkeeping software for sure. And final question here around HMRC wanting non-residents to do MTD. Is there anything stopping you from doing it now? Yes, so MTD wouldn't apply for non-residents because HMRC do not have the residency pages ready. So you would need to file through the normal self-assessment until the residency pages are ready. Perfect. So how can you prepare? I'll pass over to Eamon to cover this off.
Thanks a lot, Arj. So yeah, I guess in terms of how you can prepare, I think the first point I wanted to make was around having a separate bank account for MTD specifically. Now, obviously, as the guys have mentioned throughout this webinar, right, the two sources of income is rental income and self-employment income. So if we're going to start looking at the rental side of things, a lot of you guys may be landlords, right? So typically, as you may already know, there is a category of expenses that always come against your rental income, known as like revenue expenses. And then there is a section of expenses that are known as capital expenses and actually come off your gain when you and if you ever sell the property. Now, for those of you that file on a personal tax return, you'll know that you only kind of show your revenue expenses, the expenses that you can use against your rental income. And those are what's used to calculate your rental profit for taxation. So obviously, as the guys have mentioned, with these digital records you need to keep, and the fact that you're going to be doing these quarterly updates, it would make sense to not mix the expenditure within the same account, right? As it might cause some confusion. So for example, if you're a landlord that buys a property, does it up, and then puts it on rent, the money spent renovating, keep it separate to when you start to let out that property, so that when you do the updates throughout the year, it's really simple and you know it's the expenses that are used on your tax return. So that's your standard, agency fees, any maintenance you're doing, service charges, ground rent, utilities, etc. All the standard ongoing expenses that you may have. And then I guess for a general perspective, both landlord and self-employed, obviously you don't want to be mixing any personal expenditure in these accounts as well. Now, I know for most of the people we speak to, you do have separate accounts, but it's more important than ever to not mix your personal spending within the account. So if you are a kind of self-employed individual, you may use your bank account for everything, and then you'll come to the end of the year and you'll say, okay, let me dish out and say, right, these expenses on the weekend, for example, were not business, and the ones in the week were. If you straight away separate the bank account and all self-employment income and expenses go into the same account, and that is going to be a lot easier going forward. Question from Rob there about if the rental income is from a different bank account outside the UK. So that's completely fine. I mean, you may find it could be harder to link up sometimes the bank account with the actual softwares, but in terms of what you need to report to HMRC, you'll still be able to put that information easily onto a spreadsheet or however you decide to track it. And as long as that bank account that's outside the UK is just relating to your UK rental property, then it's going to be a lot simpler than if you had a bank account outside the UK, which is maybe getting your salary overseas and your family expenditures overseas. Then it would make sense to, again, just separate those out. Any recommendations on banks for this? I mean, typically we are seeing these new kind of, well, they're growing probably more than the traditional banks, but these more kind of tech challenger banks, like your Starling, your Monzos, your Revoluts, etc., seem to be doing quite well in this front with categorizing the expenses. But then also, as Arj mentioned, we're hopefully able to kind of take this pain away. Our kind of tracking tool, which will be out soon, will link up to any bank. So, if you're using Barclays, HSBC, whatever that is, and we'll pull in those expenses. And just like you're on the tax platform, you'll be able to categorize the expenses really well. And then to Barbara's point around rental income into a separate bank account, it would make sense at the moment if your rental income is going into, let's say, your standard bank account. There's going to be a mix of funds, right? So it could just be really good practice to have a separate bank, get your rental income paid into that, and all expenses that relate to that rental income go out of that same bank account. So when you go on our platform and you do that quarterly update, it's really easy to pull through. It's all just about minimizing your time each quarter, having to sift through a load of transactions, get them separated, put them into a spreadsheet, then upload. If it's one bank, you might be a couple of clicks away from getting it done. And I guess that links into the second point on kind of keeping those digital records, right? I know it's been mentioned a lot by Arjun and Joe, so I won't go into it too much. But having that record, I think a good point made was, HMRC will potentially do spot checks, and they might be aware that some people are going to not do the quarters properly and then just try and file off a tax return at the end of the year. So that's where the digital records come into play, where you can say, if, for example, you got spot checked and HMRC said, can you show me Q2 of the 26-27 year just off the back? You can give some figures and you have a record for that quarter. That could be ours. So could be the spreadsheet you've used, obviously, to upload. It could be the categorization you've done through our software, or any kind of banking splits you've done. Cool. And then I guess the next point is, this is where we come in, tax support, advice, help when you need it. Of course, this is a big change, let's be honest. Going to quarterly tax returns is a massive move from a UK perspective. Some of you who may have lived overseas or done some time in Europe, etc., may know that it's quite common for self-employed to do quarterly updates. If anyone's done VAT returns, then you'll know it's quite similar. But for those that are kind of traditional landlords and self-employed, it's a big change. So we'll continue to be providing comms on this. But of course, if you need that support and advice for your specific case, then make sure that you are kind of contacting expert support like ourselves. And that kind of just touches on to that last point I've got there, which is maybe reviewing your structure. Now, this might not make sense for the vast majority of you. For some of you, it may make sense. Let's say, for example, you have 2 rental properties and your total rental income is I don't know, 25,000. So you're currently under the 30K limit. You may decide to buy your next investment through a company, for example. That will keep your gross income personally down. It may also give you tax benefits depending on your other sources of income. So I think it's a really good point right now to take stock of where you actually are in your kind of investment, income, and tax journey, to kind of plan moving forward of what is your best setup for the next few years. Some extreme cases, some people may say, actually, I'm going to move overseas, right? I've had enough. I'm going to pack my bags and go. That may change your planning completely. Some of you may be moving into the UK, etc., etc. So it's a really good point, a position, to take stock of where you're at. So I guess a question, Richard, you've asked if there'll be an official statement in your HMRC account that you'll need to do this. So HMRC have obviously notified you that you are going to be subject to MTD at some point. It's going to be based off the information on your self-assessment, as Joe and Arj mentioned. So if they see your 24-25 tax return has got more than £50,000 of gross income, you will be expected to do MTD. I don't know if HMRC will officially send you a statement in April to say you are in the 50K category, but what they will do is they'll probably message you nearer July and say that they're expecting a submission. But even if the comms are not there, if you know, and as Arj mentioned, our software will automatically let you know if your 50K, if your gross income is 50K or higher, then yeah, you'll need to do that quarterly submission. And boom, 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 boom. Leah, you've mentioned around the notifications because he's not registered. Yeah, so non-residents, it's slightly different at the moment, as mentioned. So non-residents, MTD is not kind of released for non-residents yet. It's going to be coming in the future. All the information and comms HMRC have sent at the moment is really to create awareness, is to get everyone thinking that at some point you are going to have to register for MTD. It's looking into softwares, it's looking into how you're going to do it. It's again planning ahead because, for example, you might be going over the 50K income. I think Rob mentioned he'll be going over 50K this year. So he may be following the MTD the following year. It's really just to get people looking into it, understanding their situation and checking if they are going to be under MTD.
Just to add on that as well, I think it's the largest tax change that we've seen in the last 25 years. So HMRC have put a huge amount behind raising awareness, sending out material, and ensuring that everyone knows what the potential changes are. And the responsibility inevitably lies with the individual to register if the qualifying income is above thresholds. Sometimes HMRC letters as well aren't received, especially if you're living overseas. So it's important to be aware of that and to, I guess, take action if you do need, and if you do come under MTD. And we'll certainly help you do that when the time comes. Now, just to add as well on the MTD points, if you are if you're living overseas and you've never lived in the UK, you probably don't have a national insurance number. So that is one of the exemptions for MTD. If you do not have a national insurance number, you will always file your self-assessment throughout the normal process using your UTR, your unique taxpayer reference. So that is an additional query or complexity there around national insurance numbers. And there are some other exemptions. For example, if you can't access the internet, but as this is a taxed client webinar, you would have already filed with tax, can access software and the internet, so it may not be applicable to you.
Great stuff. Thanks, Arj. I guess I'll jump on to the next slide, if that's all right. So it's kind of just continuing that last point, and I won't spend a huge amount of time on this as it may not be relevant to everyone. But in terms of taking stock, seeing if incorporation may be the right method for yourself, is really looking at kind of your income levels across the board. So we mentioned that for MTD, it's the rental income and self-employment income that comes into play. Now, a lot of you also may have employment income, and I've seen a few comments there around pension income as well. So, and savings income and stock income and trading income and everything. So essentially what happens, as you all know, on your tax return come the end of the year, all of your income gets compiled together to give you your kind of total taxable income figure, and then you move through the tax rates. So what a lot of you may find that your employment or your pension income or your savings income, etc., uses a lot of the basic rate band, the 20% tax, etc., and that your rental income is falling into the higher tax rates. Now, a lot of you may know that transferring existing property into a limited company can cause other issues on its own and charges. But essentially, if you are looking to increase your portfolio size or make purchases going forward, especially now with MTD as well, it may make sense to start purchasing via a limited company to reduce your tax bill as well as the admin burden of the MTD. Now, this could be more applicable, I think, to the self-employed individuals. So there's a lot of people who are currently contracting or invoicing through consulting or freelancing, etc., and their self-employment income is essentially going over that 50,000 barrier, or it could be 30,000 in the year to come. So going into a limited company, you can start to tailor how you pay yourself. You can structure all of your kind of self-employment income that would now be flowing into the limited company. You could then pay yourself a reduced salary through payroll and use dividends, etc., to kind of manipulate your earnings in the right way to reduce that tax bill. Now, in terms of the long-term goals as well, I know I touched on it around overseas, and there's a lot of individuals, I believe, on this webinar now that are based overseas. Now, for the individuals that are overseas, if you have a limited company and you're extracting dividends from that company, then all of those dividends get categorized into something known as disregarded income, and there is no personal tax liability on those at all. So you would only be paying corporation tax. But of course, if you're a non-resident, you also only have to report your UK sources of income. So that'll just be your UK rental. So you'll probably find that your total taxable income is within the lower rates. So I guess in short, it's just an extension of my point around taking stock of where you are today, where you want to be, kind of, I know it's cliche, but where you see yourself in 5 years, because that is going to determine the decisions you make right now from the planning perspective. It may even be, for some landlords, we're seeing it really become popular now to transfer the property into a limited company. Yes, there are some upfront charges, but the upfront charges based on tax savings can be kind of covered within 2.5 years, 3 years. So if the plan is long term, then a lot of landlords are saying, I'll take the hit today to get my ongoing tax savings. They do a remortgage on the property, it pays the upfront costs and moves the property over to a company. So if there's anything in that kind of sphere, you can obviously reach out to us. We're well versed in this space and supporting a lot of landlords and self-employed individuals at the moment with their kind of structuring and making sure you're set up in the right way. But I think that's kind of where I'll close off, just to take a kind of stock check on where you're at. But ultimately, as we focus here on MTD, for those of you obviously that have filed their 24-25 return already, you'll know if you're in this next batch or not. If not, it might be a good time, if you haven't filed already, to probably file pretty soon. It's going to help you understand your situation again, right? If you get that 24-25 return done, you know, let's say within this month, you're going to know right away, first of all, if you're going to be subject to the MTD from April 2026, or if you know you're going to be there from the following year, etc. So yeah, any questions on that, then reach out. I can see there's a few questions in the chat now, and I reckon it's probably a good time to go into that Q&A. Yeah, Catherine, that's something we can help with. I believe you'll get an email when this webinar gets sent out, but essentially you can just ping a line to contact@tax.co.uk, and then we'll be able to take it from there. But definitely can help see if it makes sense for you to keep those properties in your name or move them over. Leah, there's a question there around setting up a limited company that manages a portfolio. So yeah, this is becoming like a really common thing at the moment. Now, you can set up that limited company to manage, but ultimately you can't charge a ridiculously high amount for managing the property. So as an example, let's say your rental income is £2,000 a property. You couldn't charge £1,000 management. As HMRC, you're going to see that as avoidance. You have to kind of stay within the lines of market rates. So you might be able to push 15% at best, and then you're going to be questionable over 15%. So if the standard you're paying at the moment is 10% or 12% to an agency, you might get a little bit more of an expense. If you're not using an agency, then it could be a way of reducing the profits in that way, of getting some money over. But yeah, depending on what your strategy is, there's a few landlords that have moved into the short-term letting space and using the likes of Airbnb, etc. So what you can do is almost a rent-to-rent with your own company. So you have the management company that is doing all of the Airbnb, etc., and the bookings and the income, and you pay yourself a fixed rent for that home. So again, any profit from short-term let can go within the company, and then you personally just get a base rate of rent. Again, it can be slightly under market rate, but not much. If you're just paying yourself £500 rent for a £3,000 a month property, you're going to get caught. So there's definitely ways you can be more efficient, for sure, and it's something we can look into. Cool. Any other questions I may have missed, guys?
You've got a question here from Carlos looking at, so any expense that belongs to Q1 cannot be submitted in Q2, right? Now, actually, it's the opposite way. We will be submitting all Q1 income and expenses in Q2 and so on. So in Q3, you'll be submitting for Q1, Q2, and Q3. So because it's a cumulative update, you can always provide for the full tax year as it goes on throughout the year. So hopefully that answers the question. You can submit, you can amend what was previously submitted or change as the year goes on.
Perfect. Another question there on company profits into a SIP. So yeah, you can absolutely do that. Obviously, as a director, you'll still have your standard £60,000 pension allowance. Of course, if you haven't used it in previous years as well, you can carry forward. So for year one, it could be even more. But you can essentially reduce that and put it into a pension. And then in terms of withdrawing it without a charge to buy commercial properties, again, yes, you can. It's a whole different setup. So you probably wouldn't put that into a SIP. You would go into a kind of self-administrated pension setup, which is a different structure. And from there, you could potentially buy property. So that is, again, definitely possible. Again, a lot of planning, a lot of work, but definitely something you could do. Great stuff. You can carry back 3 years, Tabor. Brilliant.
Perfect. Any other questions, feel free to use the chat. Alternatively as well, just to notify everyone, you can also send any questions directly to us via our live chat on the website, on the tax assessment or your account, or drop us an email at contact@tax. And then from there, we can either field it to myself, Eamon and Joe, where possible. Just a question here around separate bank account. Keeping a separate bank account for revenue expenditure and capital expenditure, would that mean 2 bank accounts? Now, it's not a requirement from HMRC, but it's a recommendation from ourselves. That will just allow you to submit your quarterly updates with a bit more ease, because you know from a revenue expenditure perspective, that's everything that needs to go on the quarterly updates. Potentially the only transactions that you wouldn't need to include would be ones where you are paying yourself and withdrawing income from the rental or your self-employment into your own name, and then keeping a separate one for the capital expenditure so that you can track it when you come to sell a property in the future. Question here from Carlos. Do you even have to submit a quarterly update if you don't have any expenses? Now, if you are registered for MTD, you still will need to. If you have no income and expenses, it will just be a zero quarterly update, so it will be fairly easy. But if you do qualify, you will need to submit that update. And thanks as well for the kind feedback, everyone. Glad this webinar was useful. I think that's all the questions that we've had so far. But as mentioned, if you do have any questions or would like to follow up on anything, feel free to get in touch. And hopefully now it's shown MTD will be an easy task in the near future, and we'll be able to help you every step of the way as well. Brilliant. Thanks, everyone.
Thanks, everyone. Have a good day.
Thanks, guys.